Good evening. The Indian stock markets ended with slim gains, extending their Friday's big rally after data showed a surprising pickup in the industrial output in January, and the government said it was confident of returning to high growth path in the future. Investors also welcomed the news on car sales, which rose for a fourth straight month in February. The domestic macroeconomic data dominated the proceedings, partly offsetting a weak reading on China's trade balance and lingering concerns over the Eurozone debt crisis. Indian markets started off the day on a positive note post the surprisingly aggressive CRR cut announced by the RBI on Friday. Sentiment received further boost after the country's industrial production shot up in the first month of 2012 and the government revised higher its December print. The output is measured by the index of industrial production grew by 6.8% in January 2012 as against 7.5% in January 2011. However, market participants preferred to stay on the sidelines or trim positions on the back of uncertainty over the upcoming domestic events and uncertainty over the global economic backdrop. The Sensex was up by 84 points to close at 17,587 and the NSE Nifty was up by 26 points to close at 5,359. Among the BSE sectoral indices, the Capital Good Index was the biggest gainer, up by 2.5%, followed by the Consumer Durable Index up by 2%. The BSE Realty Index and Oil and Gas Index rose by 1.3% and 1.2% respectively. On the other hand, the IT Index ended lower by 1% and the Tech Index fell by 0.8%. The broader markets ended with gains, with the BSE Mid-Cap Index up by 1% and the BSE Small Cap Index up by 0.7%. Even the BSE 500, BSE 200 and BSE 100 outperformed the Sensex. Notable gainers on the Sensex were SBI, L&T, Reliance Industries, Jindal Steel, Bajaj Auto and BAIL. On the other hand, M&M, Cipla, ONGC, Infosys and TCS were the notable losers on the Sensex. The Indian VIX ended at 26.27, up by 3.1% today. The sentiment today was underpinned by CRR cut, encouraging US jobs data and the successful Greek bond swap. The better than expected IIP data for January added fuel to the fire. Keep a watch on the inflation for February, which will be released on Wednesday. The budget session of Parliament kicked off today with the joint address by the President, where she said that the government was aiming for 9% growth in 12th five-year plan. But the Congress is likely to be on the defensive following the disappointing show in the Assembly polls. The railway budget is scheduled for March 14, while economic survey will be out on Thursday. But all eyes are on the union budget, which is to be presented on Friday. It would be prudent to take a wait-and-see approach before taking any directional call on the market. Globally, most Asian stock benchmark fell for the first time in 3 days, with stocks in China, Japan, Australia and Taiwan pacing the decline on the back of weak Chinese export data over the weekend. Weakness in some Asian markets came despite a positive finish on the Wall Street on Friday following a better-than-expected jobs report. The Nikkei ended marginally lower by 0.4% after rising sharply in the last 2 trading days. The S&P ASX index in Australia ended lower by 0.4%, while Hang Seng index in Hong Kong edged slightly higher by 0.2%. European stock markets opened mostly lower but recovered to trade slightly higher. The DAX in Germany rose to 0.4%, while the CAC index and the FTSE index were trading almost unchanged. The FTSE MIB index in Italy was up by 0.3%. Thank you. Wish you have a great evening ahead.